Hey Ben and Moriah, it's Chris. Hope you both are doing well. T-minus 10 days until the school year is finished. I'm excited for you both. Ben, I'm not really sure if that means anything for you because I know you don't get summers off in the same way that teachers do, but at least it'll be less hectic and there probably will be fewer parents calling you or emailing you. But that's not why I'm primarily reaching out. So housing, I've owed you an email for a while, so thanks for your patience with me sending this over to you. What can you get for your house? What do you want to spend on the next house? Those are the two questions we have to answer. Let me share my screen with you and show you some thoughts. So assuming a price of $715, and I never advertise a list price as a ceiling, but let's just say set for the sake of this conversation, $715 is what you sell your house for. I'm assuming $440,000 is what you owe. I won't go line by line here, but obviously these are fees that you would have to pay with listing your house. The net of what you would receive would be $234,777. Lucky number. So between 234 and 235 is probably what you can expect to receive, assuming all of these numbers are accurate and you sell for $715. Flip that around to the buying side, the purchase. So first off, I have a monthly payment of $32.16. I don't know if that number is if there's sticker shock there or if that's just way too high for what you guys want to spend. If it is, then the rule is for every $10,000 we reduce the mortgage and subsequently the purchase price, your monthly payment goes down approximately 50 bucks. So another way to say that, 20,000 drops your monthly payment 100 bucks. So instead of a $950,000 house, if you were to buy a $900,000 house, then your monthly payment would be closer to $3,000 a month. So one thing I do want to point out here is we've got $950 for the purchase price, a down payment of $450. So I've assumed you roll that $234,000 into the next down payment, and then you take approximately $215,000 from savings / inheritance to combine to $450. Again, what I said earlier, for every $20,000, it changes your monthly payment $100 a month. So you could change this and just do a $400,000 mortgage, keep $50,000 in the bank, and then that would change your monthly payment by approximately 200 bucks. So you'd be closer to $3,500 a month if you wanted to do that. Now, interest rate, 2.99%. Where did I come up with that number? If you look on Freddie Mac or most banks' websites, they're advertising 30-year mortgages in the 5s right now. What is on Freddie Mac's website from a survey that was done last week is 5.3%, plus you're giving the bank or the lender nearly 1 percentage point of the loan amount in a fee. So a $500,000 loan equals $5,000 in fees to have a rate in the mid-5s. Now, I've been doing my homework, and there are lenders out there that I don't work directly with, but I've found for clients that are incredibly competitive with the rates because they're not turning around and selling these mortgages to investors. For example, San Diego County Credit Union, they are offering a program. It's a 5/5 ARM adjustable rate mortgage, meaning it's fixed for the first 5 years, and it can adjust once every 5 years after that point. And what is important here is that there are caps. So it cannot adjust more than 2 percentage points at year 5. So you start at 2.875. The most it can go up to is 4.875 at the 5-year mark. Then it's at 4.875 for another 5 years. So even if this were to be a 10-year loan, your mortgage rate would still be less than a 30-year fixed today. I'm not advocating that this is going to be your forever loan. Now, you'll notice I highlighted the most it can increase is 5% over the life of the loan. Worst case scenario, you'd be at 7.875% when it adjusts it would have to adjust 3 times, so it'd be year 15, because it can't go more than 2 points each time it adjusts. So you'd be at year 15 before you get up to that high. With that said, you're gonna have an opportunity to refinance in the future. So why am I even presenting this as an option? Because this can be a short-term, medium-term loan option for you to prevent you from having to have a mortgage rate of 5.3%. With regards to the housing market itself, I don't see the housing market slowing down. Or rather, let me rephrase that. I don't see the housing market going down. I do see a slowdown happening, but I think of that more as a deceleration of appreciation. So instead of 20 offers, 15 offers, and houses going for 15, 20% over asking, or appreciating rather 15 or 20% in a year, I see 5 offers, 7 offers, home prices appreciating year over year in the 5 to 7, maybe 9% range, which is good. I mean, it's good for you on the selling side. You're going to sell high. Unfortunately, you do have to buy high, but it comes out in the wash because you're selling high. That being said, having rates increase, short-term rates, the Federal Reserve controls short-term rates, car loans, credit cards, commercial loans, stuff like that. That is on the rise, and that is going to lead to a recession either at the end of this year or the beginning of next year. So I'm of course talking about step number 2 here, because we've got to find you the right house first and close on it. But my proposition is that you guys look at going with San Diego Credit Union as your purchase loan. You can join with them. There's a loophole. You have to join a financial alliance federation, I think, something to that effect, in order to become a member of San Diego Credit Union without living in San Diego County. But then you'd be eligible for the 2.875 or 2.99 interest rate for the 5-year adjustable rate mortgage. So you avoid the mortgage rate in the 5s. So if your mortgage rate was in the 5s, then this monthly payment that I showed you earlier would be closer to $3,700 or $3,800 a month. So we're talking about a savings here of over $500 a month by keeping your interest rate lower. So I'll share this video with you as well as those PDFs, and I look forward to getting into the groove of looking at houses. I did look at one house today on Hopkins Road in Sierra Oaks. It wasn't a winner. It was close to Fair Oaks, and the backyard was not as big as I hoped it would be. It was 0.38 acres, but it wasn't what you were looking for. So anyways, hope you guys are doing well, and good luck with the last 2 weeks of school.